morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's see what's happening as far as the ASX Nifty is concerned, and that's reflecting the strong cues that we've seen on the global markets. We are about the 11,500 mark in trade. The ASX Nifty is indicating a gap up of almost 40 points. So that's the first positive cue that's coming in. The ADRs ended positively. Vedanta was up 4%, Tata Motors was up 4%. All the ADRs, in fact, ended with a positive bias. The worst performing ADR also was up almost 0.5%. So that's the second positive cue that we're getting in as far as traction is concerned. And momentum certainly seems to be with the benchmark indices. The Nifty was up almost 0.7%, but outperformance coming in from the broader market, the mid cap and the small cap end of the market. What performed the best was the Nifty PSU Bank, that was up another 3% in trade. So there is enough strong traction that we're seeing as far as the markets are concerned. The metal and FMCG indices did well in trade on Friday. They were up anywhere between 1.7 to 1.9% in trade. Now, how did the week pan out in trade? What happened last week? The pharma index was up 6%, IT was up 3%, and FMCG was up almost 3% in trade. What didn't do well basically was some of the high beta. The metal, infra and media counters were almost down in trade, anywhere between 1 to 2% in trade. Flows, FIs have become net buyers. They bought in 150 crores, DIs bought in another 150 crores. So close to 300 crores of net buying happening by both FIs and DIs in the market. The Nifty was up 86 points. Basically, banks and FMCG contributed. ITC, HUL contributed significantly. ICICI Bank and SBI contributed. Hardly any stocks on the losing side. Of late, HDFC has not been contributing as far as the markets are concerned. Now, on the FNO side, there was fresh buying that was seen on the Nifty, open interest build up of 3%. Even similar case was the case with the Nifty Bank, that also saw open interest build up of 3% on the long side. So there is enough traction. Now, what happened on Friday was the fact, since the market moved up, put writers became aggressive and call writers had to shed positions in open interest, given the fact that their premium was going up and the market was going up. However, a little bit of resistance will come in at the 11,600 mark in trade. That's where they wrote in Friday. Now, the clear indication is that there is enough call writing at 11,500, 11,600. So the bears believe that there will be resistance that is coming in. It's clear that at 11,400 there is very strong support. But if 11,500 gets taken by strong, you could see a much more faster rally to levels of 11,600 very, very soon. Now, as far as stocks in the FNO band are concerned, the Adani Twins, Jet Airways continue to be in the FNO band. The new entrant includes Raymond, which was up another 3% on Friday. As far as the PCR is concerned, the Nifty PCR improved to 1.66. The Bank Nifty PCR again moved up above the 1 level. It was up at almost 1.4 in trade. Now, a couple of five stocks that I want to point out. First of all, Yes Bank, open interest build up of 3%. Stock trading at record highs. Probably the momentum will continue on the counter. The second counter is Lupin. So short covering, open interest was down 4%. The counter was up 4%. Pharma as a pack did well on Friday. You had SBI, which again has come back above the 300 mark in trade. Very low open interest, but there was price action that was seen on the PSU banking front, and that led the PSU banking index going much higher. Apollo Hospitals saw fresh buying, open interest build up of 10% on the long side. And finally, what we are seeing is Grasim, open interest build up of 5%, and that too on the long side. So that's what's happening as far as our markets are concerned. We'll go across to Bloomberg's Rosalind Chin for all the top international headlines.
Well, reports from Washington say the administration has rejected Turkey's attempt to tie the release of American pastor with relief for a major Turkish bank facing huge fines in the US. The Wall Street Journal says Ankara has been told that all other issues are off the table until Andrew Brunson is freed. His detention has triggered a financial crisis in Turkey, with US sanctions helping to push the lira to record lows. Turkey's credit rating's been cut further into junk by both S&P Global Ratings and Moody's. S&P says it expects a recession in 2019, with inflation to hit 22% by year end. Ankara has stopped banks from borrowing at the benchmark repo rate, forcing them to use the overnight rate, which is 150 basis points higher at 19.25%. It's trying to counter the lira's slump without formally hiking, a move opposed by President Erdogan. Malaysian Prime Minister Mahathir Mohamad has told China that investment in his country can help it reduce the trade deficit. But he admitted Malaysia had previously borrowed Chinese money it could not repay and used it on unnecessary infrastructure. Mahathir has suspended the $20 billion East Coast Rail Link project and started an investigation into pipeline deals linked to a unit of China National Petroleum.
When the Malaysian government borrows money to build infrastructure that it cannot afford, that is not going to give any return, then of course that is not good for Malaysia. We are not against Chinese companies, but we are against borrowing money from outside and doing having projects which are not necessary and which are very costly.
Venezuela is taking drastic measures to reduce its flailing economy, devaluing the bolivar by a staggering 95% on Monday. The official rate will leap from about 280,000 to the dollar to 6 million, and the government will try to offset the shock by raising the minimum wage 3,500% to the equivalent of $30 a month. Inflation is already seen at 1 million% this year. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Roslyn Chin. This is Bloomberg.
I think the word around Washington is that nothing major will be announced this week, but it's seen as extremely positive that the Chinese delegation led by Wang Shiwen is really coming to Washington. It's the first high-level trade talks between the U.S. and Beijing for about 2 months. It seems like it's been a very long time. And it comes at a crucial time, as you say. The second round of tariffs from the U.S. are due to kick in this week. And beyond that, there's much, much bigger tariffs looming. So I think both sides really see this as a time maybe to pull back from the brink, really take a deep breath and start working on something that might ultimately end up with some kind of a major announcement later in the year from President Trump and President Xi.
Yeah, and, on those tariffs there, the administration, of course, is going to be going through a lot of data, a lot of feedback by several days of testimony from companies as well as groups pushing back against those. Is there any insight as to whether they might actually listen?
Well, this is the third time that a lot of company executives and business group officials have come to Washington to speak to the Commerce Department. Mm-hmm. There's 6 days of testimony coming up starting tomorrow and going all the way into next week. It's unclear if that really gets through to the administration, but they have made extra time to hear these officials. And once again, I think they know that with $200 billion in tariffs possibly looming in early September, that this is really the time to listen. And, if you feel like the Trump administration has targeted the tariffs to be the least damaging in the first instance, by the time you get to the third round and you get to $200 billion, the pain is really spread far more widely. So it may be that the people speaking this week get a closer hearing.
Stock of days, Hatsun Agro predicts where the promoter has bought in more than 0.5% stake in the company. The promoter has bought in 10 lakh shares at a price of around 719 rupees per share, which is more or less in line or in the range of the current market price of the company, which aggregates for a consideration of around 72 odd crore. Now, the promoter, R.G. Chandramohan, already holds more than 55% stake in this company. If you look at the shareholding pattern of the company, promoter shareholding stands at more than 70%, 72.5%, and public shareholding stands at around 27.5%. Notably, the promoter stake has fallen in the last 1 year from 74.7% to 72.5%. However, you have some interesting FPIs like Jwalamukhi and Malabar, which hold the stake in the counter. Also, if you look at the financial performance of the company, the EBITDA is at multi-quarter high for this company at a number of around 122.85 crores. So that's clearly the jump that you can look at in the last 1 year for the company. Also, the stock trades at a higher multiple of around 50 times, which is comparison to its peers looks to be an expensive bet. But then if you look at the capex growth, it seems to be an attractive bet for Ambit Capital, which has initiated a buy rating on this counter back in July with a target price of around 865, which indicates a more than 20% upside from the current market price.
Shifting focus to currency markets, remember Indian currency and bond markets were closed on Friday due to a local holiday. However, if you see for the week, the rupee weakened to new low on the back of growing concerns over widening trade deficit along with strong dollar demand from importers. Remember, the home unit has touched an all-time low of 70.40 levels last week on Thursday before closing at 70.16 levels versus the dollar. For the week, the rupee has depreciated traded almost 2% against the dollar, thereby marking its second weekly drop. That apart, India's foreign exchange reserves dropped to $400 billion for the week ended 10th August. Speaking of the bond market, sovereign bonds declined on Thursday as yields ended 4 basis points higher at 7.86%. For the week, yields have risen almost 11 basis points. Well, on the global front, dollar index ended lower for the third straight session on Friday. However, it now trades steady, well above the 96.1 mark in the early Asian hours. Dollar index is largely weighed on the back of reports of potential progress on US trade talks with both China and Mexico. That apart, both euro and pound gained on Friday versus the dollar. And lastly, speaking of dollar rupee, now it is trading at 69.82 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade.
Amongst the stocks that we're tracking in trade today is L&T, which will consider a share buyback on August 23rd. That apart, you also have Reliance to remain in focus. And this is on the back of an ET report which says that Alibaba is in talks with Reliance for a JV in India. Watch out for that name. As also Sadbhav Infra. According to a ET report, Atlantia, CDPQ and Cube Highways are in fray to buy a stake in the company, and they plan to acquire about 35 to 40% stake. The deal is said to be worth about 2,500 to 2,800 crores. So watch out for Sadbhav Infra, as also Sadbhav Engineering, which holds 69% stake in this company. Prism Johnson has received LOIs for 5 captive solar power projects via various SPVs. So this is one stock which could react positively. The aggregate capacity is 22 megawatts, and the projects are likely to be commissioned in about 6 to 8 months. Also some news on the back of likely disinvestment. You have NBCC and HUDCO, both will be in focus. This is again on the back of a FE report which says that the government could sell 10% stake in these two companies via the OFS route to raise about 2,400 crores. That apart, you also have a small cap company, Dr. Agarwal's Eye Hospital, which will be in focus. This is on the back of a ET report once again which says that Chris Capel is in talks to buy a minority stake in the eye care chain Dr. Agarwal's Healthcare, and these funds will be used to expand the eye care chain, which is run by the listed entity. So the funds will go into the listed entity, so watch out for that name. Those are some of the stocks that you need to keep track of.
Well, looking at the oil market, it has declined. We have not seen a $70 day for the whole month of August. So that is interesting in itself, that it's been essentially a straight down move with lower highs and lower lows each and every couple of sessions here. So what we've seen here this week is a dip. We're down about $1.50 for the week, but I would attribute a lot of this to the dollar. We just made some new one-year highs in the dollar, but let's pay attention here, because we are, depending on how we finish today, in position for a new high with a lower weekly close, which could be the start of a dollar stall that would help out all commodity markets.
So at this point, do you see any bullish catalyst for oil?
Well, there's always potential bull catalysts, and there's always price shock potential is always in the cards for oil. Anything that happens around the world, any disruption, any geopolitical issues. So there's always potential there. We've essentially come back to the breakout. We broke out at 63 a couple months ago. Now we've come back to that. Let's see if that level holds. 66 had been an interesting point here in the last few sessions, and we're not that far away from it. So I think technically we're getting a little bit oversold. We want to see how the markets react on a bounce, but you alluded to China. I think the news this morning was the fact that the U.S. is going to discuss sanctions against China if they buy oil from Iran. So it's more symbolic than anything else. Iran's oil goes to China, South Korea, and to India, and it doesn't have any impact here. But I think these kind of things are the issues that can put in a little bit of risk premium back in an oil market that's had that subtracted for right now. Pay attention to the macro market. You've seen the stock market have a big reversal and bounce here yesterday, and we're actually positive on the week. So if we can make some new highs in the S&P, we're very close to doing that once again. That could be a positive tone for global growth and for the oil market.
But Alan, how do you account for the recent increase in stockpiles that we've seen here in the U.S. and what that's going to do to the sentiment in the market surrounding oil?
Well, it had been pretty much a straight down move in that oil inventory. So we've been, draw down. So we've seen a bit of firmness here recently. There are issues in America. Yes, we continue to produce more, but as far as the, getting it out of getting it distribution, that can be a bottleneck issue sometimes. Also, we're seeing, and I don't think we talk about this often enough, you saw that the numbers were raised for global demand. That's going to be, I think, the issue that we don't talk about enough because of global growth and for expanding economies. Yes, emerging markets had a tough time in their currencies here in the last couple of days, but I'm looking at that being a short-term phenomenon, and I don't think there's any major overhang with this Turkey situation.
All right, Alan, real quickly, can you talk to me a little bit about metals? Because, we've had really an awful week here, particularly with a lot of the industrial and base metals.
Yeah, it's been an awful month. It's been an awful year. And again, it's very much correlated to the dollar. There's much more of a correlation to the dollar being up and the metals being straight down than we've seen in crude oil. Crude oil has some internals that have some signs of strength, whereas the metals are straight down. At some point, they're going to offer some value. But for right now, there's been just a direct correlation. Until the dollar stops going up, you're going to see the metals continue to decline. So I think if you can look 6 months, 9 months, a year out, I think that's particular sector may have some value in it. If you can look at the XME, the ETF that tracks the metal and miners markets, I think it's very overdone, and I think that particular sector could make a comeback as time goes on, as the dollar stops going higher.
On the big brokerage calls for the day, first we have is Bank of America Merrill Lynch on Dalmia Bharat. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 3,335. Now according to the brokerage, with rising exposure to East India and market leadership by financial year 2021, Dalmia Bharat is best placed to benefit from housing for all scheme of the government. Now the company's unit EBITDA is higher than peers, which should sustain going forward according to the brokerage on the back of power, fuel and logistics cost control. Now along with this, rising share of premium brands, composite, cement and ramp up of acquired distressed asset at below replacement cost would improve the margins of the company further. Now, summing up all these positives, that would result into a 36% annualized growth in the company's EPS over FY18 to FY21 and also a 710 basis points rise in the return on equity over the same period. Lastly, the ongoing litigation related to the Banani Cement acquisition would be the only overhang on the stock according to the brokerage. Second, we have is ICICI Direct on LG Equipment. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 350. Now, according to the brokerage, the company is aspiring market leader in compressor market with solid fundamentals. Now, demand for air compressor is generally dependent on the overall industrial activity, which is expected to pick up going forward and which would also lead the India business growth for the company. Now, along with this, sustained turnaround in its foreign subsidiaries would drive the next leg of profitable growth for the company according to the brokerage. Now, the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 18%, 22% and 29% over FY18 to FY20.
Here's an update from the world of sports. The Indian contingent opened their account on the inaugural day of the Asian Games in Jakarta. Indian shooters Apurvi Chandela and Ravi Kumar bagged bronze in the 10-meter air rifle mixed team event. India's first gold was won by 24-year-old wrestler Bajrang Punia in the 65 kg category of the men's freestyle event. However, twin Olympic medalist wrestler Sushil Kumar was knocked out in the first round of the 75 kg category. Other medal prospects, including 16-year-old Manu Bhaker, too failed to make it to the knockout stages of her pistol shooting event. Now, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories that you'll find on the website, bloombergquint.com, if you log on. Here are just a couple of them. The Narendra Modi government has clarified that the GDP back series data with 2011-12 as the base year are not official estimates, as the calculations are still a work in progress. The methodology for backcasting GDP series has not yet been finalized, and various alternative methods are being explored, it said in a statement. This comes at a time when the Congress is using this data to defend its management of the Indian economy during the tenure of the UPA at the centre. The UIDAI has announced a phased rollout of the facial recognition feature as an additional mode of authentication, starting with telecom service providers from the 15th of September. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.